If currency pairs are measured in pips, commodities and indexes are measured in ticks. Like a pip, a tick is the smallest possible price change for any commodity or index-based instrument. And like pips, the value of a tick will be different for each instrument. For example, if an ounce of gold is trading at $1,700 and moves by 1 cent to $1,700.01, we say that the gold market moved by 1 tick. If a barrel of crude oil is trading at $60.05 and moves to $60.06, again, we say it moved by a tick. In both cases, since we price the commodity in dollars, 1 tick equals 1 cent. But not all instruments move in 1 cent increments. For example, soft commodities like wheat, corn, and soybeans all move in 25-cent increments. So let's say wheat moved from $690.50 per bushel to $690.75. We say it also moved 1 tick, even though that tick is now worth 25 cents. Now, the most important thing to remember is that, for the time being, all commodities are priced in US dollars. So to calculate the value of a tick, we must simply multiply our position size by 1 tick. Let's take crude oil as an example. If we buy 100 barrels of crude oil and the price per barrel rises by a 1 cent tick, then our position profits by $1. If we buy 500 barrels of crude oil, that means every time the price rises by a tick, we make $5. It's the size of our position that dictates the monetary value for each tick move. Stock indices also move in ticks. Unfortunately, each index will have its own way of calculating a tick. At the S&P and NASDAQ, a tick represents a 25-cent movement. With the 3 European indices, each tick represents a 50-cent movement, and the Dow Jones moves in increments of $1. So if the S&P 500 moves from $1,650 to $1,650.25, we'll call that a tick. However, if the Dow Jones moves from 14,700 to 14,701, that too is considered a 1-tick movement. In the news, though, we'll also hear about indexes moving by a point. Unlike a tick, a point is a price movement of one numeral that's located before the decimal point. So if the S&P increases from 1,650 to 651, that's a 1-point movement. It also happens to equal 4 ticks, since the value of a tick on the S&P is 25 cents. With the Dow Jones, 1 tick equals 1 point. Calculating the value of a tick is complicated, especially since each index has its own currency. The US indices obviously use the US dollar. The FTSE uses the British pound. The European indices use the euro, and the Nikkei uses the yen, and so on. Now, whereas in Forex we have 100,000 unit lots, in indexes our contract size is measured in indexes. So let's look at the Dow Jones. The minimum trade size for each stock index is 1 index. So if we believe the Dow is going to increase in value and we want to open the minimum size, then every time the Dow moves 1 tick, we'll gain or lose a US dollar. If we have a euro trading account, our profit or loss will automatically be calculated at the current EUR dollar exchange rate. The FTSE 100, this time, let's say we wanted to short sell 5 FTSE indexes. Our calculation will be as follows. 5 indexes times 0.5, which is a tick, equals £2.50. And every time the FTSE moves 50 UK cents, the value of a FTSE tick, we will gain or lose £2.50 since we bought 5 indexes. So say the FTSE moved from 6,400 to 6,300. We would make £500. Again, if we have a euro or US dollar platform, our profit is converted at the current exchange rate, and that's what we'll see in our account. Some indices will have a minimum trade size based on their value. For example, the Nikkei has a minimum trade size of 100 indexes, since the value of the Nikkei is measured in a yen. And if we were to buy just 1 index, it would be too small a trade. For the other indices we mentioned, the minimum trade size is just 1 index.